Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne. Here's our top stories this morning. Asian stocks slip as the start of U.S. megacap tech earnings fails to impress, and Tesla posting its fourth straight profit miss, and Alphabet facing pressure to keep up on AI. Chinese stocks in focus as well after suffering their biggest drop in 6 months on a lack of major policy support out of the third plenum. And Kamala Harris hits the campaign trail with a direct attack on Donald Trump, saying Americans face a stark choice in November. A quick look at the market action here this morning. Of course, we're focusing very much when it comes to Asia tech, but we are seeing that pressure here, of course, after these big tech earnings did disappoint. So we talked about Tesla, we talked about Alphabet, really both of which did lead to that Mag 7 lower. So the after hours trade, we continue to see those Tesla shares were down some 7%, which doesn't bode well for how Wall Street will wake up tomorrow. But certainly it's a good thing maybe that there's a typhoon in Taiwan in some ways. Of course, it's given that Taiwan markets are shut now, they won't be able to react, at least when it comes to TSMC and some of these chip players are concerned. But yes, Taiwan and Philippines are actually closed this morning due to Typhoon Gaimi there and what's been going on, the flooding situation in the Philippines. Schools as well as the government offices have been shut this morning. But there you go. So it's a mixed picture across equities, but you are seeing some modest moves here when it comes to stocks here in the region. We are focusing on that 2-year yield, where yields are down some 3 basis points. It was a pretty solid bond auction there. In fact, our BI analyst was saying it's probably one of the best on record here, just really underscoring the market's bets when it comes to these rate cuts as well. We're watching commodity markets very closely, so there's a little bit of recovery in oil. But really, iron ore, and if you take a look at some of these base metals, have really been hit quite hard, particularly the ones in China. So you take a look at how iron ore futures in China are doing. We continue to see that decline here today, about 1%. We're getting very close to that April low. If we actually break below that, we're talking about the lowest that we've seen in a few years or so as well. Copper hasn't been doing well. Oil futures are still looking lower in Shanghai this morning. So certainly the macro picture in China and the weakness there certainly is what led to that big sell-off in the CSI 300 yesterday as well. You don't normally see declines of 2% on that benchmark, but that's what happened. So it brought us to one of the biggest declines we've seen since January here right now. What are going to be the next catalysts? We're still looking at that Politburo meeting right now, but certainly there's also signs that the national team after this plenum are pulling up out a bit. So maybe that's why we're losing that key support in this market. Gold Dragon was down about close to 2% last night, and we're seeing their futures punching a little bit lower this morning. The currency at 7.29. Keep in mind CGB yields as well. They're already below the levels that analysts expected some sort of intervention from the PBOC. They were thinking maybe 2.25 for the 10-year was that red line. We're watching if we ever get back to those all-time lows that we saw last month. 2.18 is that level to watch here right now. In terms of what to watch in your agenda here today, of course, we talked about the slump in stocks, the EV tech stocks in particular, just given what we've been seeing with the Mag 7, with Tesla shares after hours as well. Luxury stocks, LVMH, the latest to really chime in and talk about this China slowdown really weighing on their earnings. We do have a CGB auction here today, here in Hong Kong, a big hearing for Jimmy Lai as well that's happening this morning. And we're still focusing on these cross-strait relations here this morning, just given because of the typhoon too, they've had to adjust in Taiwan some of these military exercises here this morning. So certainly it's a big markets day. Let's bring in our team now. Transport reporter Danny Lee is with us here in Hong Kong, along with our Asia equities reporter Charlotte Yang, our executive editor for Asia Tech Peter Elsham, also joining us from Tokyo. Danny, let's start with you. A big drop in the after hours. What do you think was one of the big misses here for the market?
I mean, the big miss clearly is on the earnings side, given the deliveries, which were always going to be a bit of a shrinking picture here, given its stale lineup. But we've still got to look at the future. This is what Elon Musk wants us to talk about, the future of Tesla, as it's reframing that kind of debate about Tesla being more than just an EV company, to be more of an AI company. And we saw headlines actually come out in the last kind of 10 minutes or so talking about Elon Musk wanting to see if Tesla should invest $5 billion into xAI, which is his AI business, in order to further his pursuit. And it kind of strengthens that narrative of Tesla being a very credible Magnificent Seven stock here.
What Musk said on that call, the value of Tesla overwhelmingly is autonomy. Everything else is just noise, he mentioned. But we confirmed that Bloomberg report that the robotaxis are going to be delayed until October. A humanoid robot, we're not sure when that's going to come out as well. I mean, is it just premature to really talk about these things really helping the stock right now?
I think investors just want to hear more details, and this is what we were looking out for. More details on key things for the future, things that will kind of redefine Tesla, but which will take many, many quarters, because this is a long, slow-burning set of projects that Elon Musk has talked about for a very long time, and clearly for the here and now, investors are a bit frustrated by the kind of tough picture here for the core business, which is EVs.
And Peter, I'll bring you in here right now and talk a little bit more about what we heard from Alphabet, because that was sort of, in terms of the earnings side of things, it was a beat when it comes to top line as well as in revenue. But still, investors sent this stock lower after hours. What do you think is going on here?
Yeah, as you say, the numbers were pretty good. Revenue grew about 14%. Operating profit was up more than 30%. So it was a pretty strong set of numbers on that side. They beat expectations on both sides. But a couple of things are going on here. First, they beat incrementally. They were a little bit better than it had been before. It wasn't an NVIDIA-style beat where they really blew out the numbers. It was somewhat better. And then on top of that, one other thing that happened overnight is that we understand Alphabet had been talking about acquiring this Israel cybersecurity company, Wiz. That was going to be a $23 billion deal. The Wiz side walked away. They ended up deciding not to agree to the price that they were talking about with Alphabet for a number of different reasons. So one, they're not able to get that deal done. And two, it signals more broadly that Alphabet is struggling to make some of these acquisitions that may help them grow much more substantially in the future if they're able to get into new businesses. Partly that's because of valuations, but the real thing that's kind of hanging over the head of Alphabet and many of the other big tech names out there is these antitrust concerns, where the U.S. and European regulators in particular have been pushing back on the big tech companies trying to consolidate their power, trying to move into adjacent areas. We've seen these in a few different cases, and that's also hanging over the head of Alphabet at the moment and its investors.
It seems like on the analyst call, too, there were a lot of analysts asking about when are we going to get those returns on those AI investments for Alphabet. Did we get much clarity on that?
Right. Yeah, very big question about AI. Alphabet, of course, had a big head start in AI. They invested a lot of money into it. They have probably the best engineers, or they had for a long time. And then Microsoft and OpenAI in particular sort of leapt ahead with ChatGPT. Microsoft has been very good at kind of capitalizing on how they're using AI within their services. So Google is playing at a bit of catch up there. They're trying to figure out how they're going to integrate those kinds of AI services into what they offer. For example, now in OpenAI, you can go and not just search for results the way you would on a Google search box in the past. Instead, you're going to get full-blown answers. You're going to get descriptions. You're going to get links to pages that are much more user-friendly. So the real threat to Google is that goldmine of a search business is going to be threatened by some of these new AI services. They're trying to capitalize on that. They're offering some similar services themselves, but it's not going that smoothly at this point, and they have to prove that they can actually figure out how to integrate that technology into key areas like search, some of the other services that they offer, to be able to generate actual revenue. They need to actually build up the revenue so that we can see the top line grow much more quickly than it is right now.
All right, Peter Thelstrom, thank you so much. Our executive editor for Asia Tech, joining us out of Tokyo. I want to get to Charlotte now and really talk about what we've been seeing across these Chinese markets. This 2% drop on the CSI 300 yesterday, and we are seeing some signs now that maybe that state support may not be there as strong as we did maybe just a few weeks ago leading up to this plenum, right? So we saw in terms of turnover in some of these larger ETFs, the ones that were suspected that the national team had been really kind of buying, was lower than really the average as well. So certainly maybe signs that we're not getting that national team there as much. Let's bring in our stocks reporter, Charlotte Yang, right now. So is this just a glimpse of what these Chinese markets will look like without the so-called national team?
Yeah, so we're seeing it's becoming very painful, again, for this market, especially the weakness was very prominent yesterday because of the national team seems to be standing on the sidelines, judging by that, the turnover lower than average turnover of that basket of ETFs. And this bearish sentiment seems to be coming back now that investors see, limited details from the Plenum, and that the attention is shifted to focus on the struggles with consumption, also with property. So we really need that, that forceful buying of the national team to help put the floor under the market. Now, the Shanghai Composite today, we're watching it steps away from the 2,900 level.
Yes. A lot of people are looking at this Politburo meeting. What are expectations like looking up to it? And what have you seen in the past in terms of stock performance?
Yeah, so the Politburo meeting, the July one, is definitely seems people, even though we don't know the specific dates yet, but investors do not have a specific expectations, but they do want to see more support for the real estate sector or consumption. But judging from last year, the July meeting, they did proved to be quite pivotal in terms of policy for giving those support. But the gains we saw with CSI 300 last day, the immediate day after the Politburo, was 2%, but then that quickly faded away. Even though the setups looks attractive, positions is light, bearish sentiment again, that makes even a shallow rebound easier. But we do need those more forceful catalysts to help bring that back.
Charlotte Yang, our Asia stocks reporter there on what to look out for here in these Chinese markets. And stay with us here with Bloomberg as the rest of these Mag 7 report their earnings. We have Microsoft, we have Meta results that are out next week, along with Apple and Amazon. NVIDIA also delivering its update at the end of August. Coming up on the China Show, we get more analysis of the outlook for big tech with Beth Kindig, lead analyst at IO Fund. She's joining us in the next hour. But next, we're talking market strategy with BlackRock's Tommy Ta as investors assess the renewed slump in Chinese markets. We're counting down to the opens of trades in Shanghai, Shenzhen, and Hong Kong. Futures are negative this morning. This is the China Show. Happy Wednesday. All right, this is what you're seeing when it comes to the approach to the open here this morning. Continue to see some negativity when it comes to these markets in China. So that bearish sentiment seems to be continuing for another day here as well. We're still watching those CGB yields very closely here. We are getting very close to those all-time lows here today. And yeah, your fix just popping up, I think, right now. I'm watching it very closely. We'll see how that all goes. But let's bring in Thomas Ta, head of APAC iShares investment strategy at BlackRock. I'll start with what we've been seeing in these U.S. earnings. Everyone was expecting maybe earnings would be the next sort of way to keep the Mag 7 afloat, but so far not so much. Do you think earnings are going to actually further lead to this rotation out of Mag 7?
Well, it certainly seems like it. The expectations for Mag 7 earnings are high, as they have been, for the last 18 months probably. So, if you look at the valuations of U.S. equity markets and tech in particular, they haven't expanded that much because the earnings growth has been strong. However, as we've kind of gone through the quarters, you start to see investors looking more at forward projections and company rhetoric and less about the actual numbers, because the numbers continue to outperform. But I think, as last quarter, I think the last time when I was here, last quarter on NVIDIA was about to come out. Everyone's talking about NVIDIA. It's always a little bit concerning when there's so much focus on one or two stocks.
Yeah.
So, I think, moving into the second half of the year, it's lower the beta in the portfolio, particularly when it comes to U.S. equities, continue to build quality. And there is, of course, concentration risk in those Mag 7.
Yeah, I mean, some of the top equity ETFs are, just another version of a cap-weighted, float-adjusted index, right? So how bad have outflows been of late?
Yeah, inflows have been actually quite good for a tech. And like you said, I think the confusing part is, you have Mag 7, then you have single equities, and then you have tech, and then you have quality, and they're all kind of holding the same thing. So, tech, quality, the rationale for holding those has been the earnings has been good. They have strong balance sheets, et cetera. However, on the other hand, there's a lot of concentration risk when you hold those names in so many different pockets of the portfolio. So there hasn't been a lot of outflows, but I think what we're starting to see more is a little bit of a rotation of inflows into some of the laggards and the cyclicals. And I think that will probably continue moving into the next few months.
You mentioned, though, it's still a sort of seismic structural transformation, right?
Yeah.
Whether it's the AI plays, transformation, the rewiring of global supply chains? I mean, what is the strategy around that now, you think?
Well, I think, short-term and long-term are very different. So strategically, investors are looking at, okay, we all know about the AI play. It's kind of started with semiconductors. That's what most investors, particularly in Asia, have been using, semiconductor ETFs, sector ETFs. And kind of what, where do you kind of move into now? Is it digital security? Is it copper transition? These kind of longer-term thematic plays. So, I think on the short term, you'll start to see a little bit more of a rotation out of pure AI semiconductor type of plays, more into the longer-term cloud and also the transition themes that we're starting to see emerge. But I think that's a much longer term, and I think the next few months are going to be more about how do you position for volatility.
Yeah, and what about when it comes to the positioning of the bond market here right now? It seems like this market is very much bracing for cuts to come.
Yeah.
What does that mean for carry, for really where you find income now?
Yeah, well, I think, for us, income is here in Asia, particularly in the high yield market. I think that's been we've seen a lot of interest in that, both on the ETF side and on the active side. There was a lot of concerns over Asia high yield and its exposure to China property. That's come down from around 40% to around 7% now. You're getting around 7% yield. You can get the same thing in Indian government bonds. So a lot of that yield is actually here in Asia, and you don't necessarily have to take that exposure risk in the U.S. And of course, the carry also depends on what your funding currency is.
What is BlackRock's base case, though, when it comes to the Fed? Is it the discussion now around 2? Is it 3? And how do you see politics really impinging on what the Fed does?
The latter part is obviously difficult. I mean, I think, Trump is inflationary, but so is Biden. So, either way, it seems to us...
Not Biden anymore.
Yeah, not Biden. Well, he was, sorry. Yes, right. Kamala, I'm not sure, but Biden certainly was. So I don't think either Democrats or Republicans are particularly deflationary. However, how you play those, the underlying sectors are slightly different. But when it comes to rate cuts, it looks like we'll have 2 this year. And then I think, for us, that could be kind of it for a while, because we think rates are going to be higher for longer.
And how do you look at duration now?
I mean, spreads are quite tight in a lot of different places. For us, it's more about, we're not actually that comfortable moving beyond 3 to 7 years. We still like the belly of the curve and short duration, 20+ years. We have seen some rotations into that in the ETF space, but I think for us, we're still short duration. We think that's the most attractive part of the curve at the moment.
Yeah, you mentioned about what U.S. election risk might have on bond markets. I'm just wondering, how are you strategizing around what happened? I mean, obviously, we've had so much news, and the dynamics have really changed, and we're seeing almost like a reset of the election cycle here right now.
Yeah.
Does it just mean that there's more volatility to come? Is it time to kind of re-look at these Trump trades?
Yes, and I think investors have been looking at those Trump trades, again, moving back more into an inflationary cycle. There were a lot of questions, I know we'll probably talk about this later, but there are a lot of questions on what does Biden mean for China versus Trump mean for China. For us, they are different, but neither are particularly great for U.S.-China relations. And so, as we move into this election cycle, yes, volatility picks up. The market is now expecting 2 rate cuts, as we said. And then I think we'll see a little bit more volatility on equities, I think, moving into the second half of the year. All
right. Hold that thought, Tommy. We have more with Thomas Tall, their head of APAC investment strategy at BlackRock. Just want to recap that reference rate from the PBOC here today. So 713.58. We mentioned yesterday the PBOC didn't really push back really on the currency there and the weakness that we have seen of late here today. But you take a look at how Hong Kong is faring. There you go. Oof, your pre-market not looking too good right now. There you go. We've adjusted a bit now. We're seeing still some downside. But yes, just marginally speaking here right now. AFI futures are also slightly in negative territory. And we are seeing a little bit more strength coming back into the currency. But it has been pretty marginal here this morning. So yeah, we're obviously still looking at what these big tech earnings are going to mean for China tech. Certainly when we have seen Mag 7 sell off, China tech actually does benefit from that. So we'll see how HS Tech fares in all of this as well. We got plenty more to come. This is Bloomberg. Welcome back to the China Show. Here are some of the big political stories we're following from around the world. Ukraine's Foreign Minister Dmytro Kuleba has arrived in China to discuss Beijing's possible role in ending Russia's invasion. Now, it is the first visit to Beijing by a senior Ukrainian official in 8 years. China has put forward proposals for a peace initiative that would include Russia at the table. Ukraine is attempting to improve ties with Beijing as Western support wanes. Now, India has unveiled a budget that includes massive spending on employment and projects favored by key political allies. Finance Minister Nirmala Sitharaman pledged nearly $24 billion to create new jobs. That addresses a top concern for voters in recent elections, which denied Prime Minister Narendra Modi's BJP a majority in parliament for the first time in 10 years. U.S. Secret Service Director Kimberly Cheadle is resigning after taking responsibility for security failures at the rally where Donald Trump was shot. Deputy Director Ronald Rowe will lead the Secret Service as acting director. Both Republican and Democratic lawmakers have called for Cheadle to step down amid a barrage of criticism over perceived security lapses. All right, we'll take a look at when it comes to these markets. Of course, that bearish sentiment seems to continue for another day, although right now in the pre-market, we're marginally lower when it comes to Hang Seng. HS Tech is also seeing downside about 0.1%. But Charlotte was just telling us, we're watching some key milestones, particularly in the onshore market. Shanghai Composite could be hitting that 2,900 level as well. We're also watching, what are the signs of the national team? Are they likely to be continuing to sit on the sidelines here today after what we've been seeing on some of these ETFs that we've been tracking? I did see some signs of that pulling back in support here post-Plenum here. So what are the next sort of milestones to look out for here today? In terms of analyst actions, there has been some interesting reports on the consumption plays in particular. I think Daiwa had one when it comes to Nongfu Spring. Those 8 shares have been cut to neutral at Daiwa. Also a downgrade when it comes to Chow Tai Fook from that firm as well, with a price target of $7 here. And Li Auto 8 shares rated a new buy at Western Securities here today. I think they're still talking about an upside in double digits with that price target of 98.34. Some stocks to watch. We're going to focus on the EV sector, just given those disappointing earnings coming through from Tesla. The chip side of things we're also looking out for here today. So there you go. ASMPT is down some 6% in the pre-market. You're seeing NIO, XPeng also down by 2 to 3% here. So certainly we're watching very closely how this EV trade is going to go today. So it's very going to be much an earnings narrative here today that's going to be driving a lot of these stocks. And also your big tech and how China tech is doing on the face of this sort of sell-off we've been seeing in the U.S. That's certainly going to be one to watch here today. There you go. Not much movement there, at least. Tencent is just down about 0.1%. We got the open coming up. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the opens of markets in Greater China here. Keep in mind, of course, as we take a look at markets, the Philippines as well as Taiwan markets are suspending their trading here because of the impact that we're seeing from Typhoon Gami. So schools and governments have been shut here as well. Our very own David Ingles is trying to fly back from Manila here right now. I heard he's been caught into some flooding as well. So that's one to watch here today. But yes, at least when it comes to what they're seeing in the Hang Seng, we're not seeing sizable declines despite what we saw in the U.S. overnight here, where basically the after-hours trade of the likes of Tesla, Alphabet did really kind of disappoint investors on those earnings as well. So we're watching very closely how this fares throughout the session. But certainly here today, we're still focusing on that bearish sentiment that we saw across the onshore markets yesterday. You rarely see a 2% drop in the CSI 300. That was the biggest drop we've seen in 6 months for that gauge as well. And here we are at the get-go here. We continue to see declines across the board here, a fifth of 1% the downside of the CSI 300. We're watching that 2,900 level for the Shanghai Composite as well. That could be a key psychological kind of level as well. They're watching small caps are also selling off a bit. You are catching maybe a slight bit in the 10-year yield in China, but not too much here. But we talked about that level is already below what some analysts were expecting of when the PBOC could intervene. We haven't seen any signs of it yet at this moment. But yeah, we're taking a look at some of the commodities. I mean, it's really been the base metals have really been tumbling here. Look at iron ore. ore, and we're seeing it down about 1.6%. If we see it pass these April lows right now already for iron ore, and crude continues to see some downside here. So the macro picture is not doing too well for the commodities space as well, but we're still watching some of these big cap names like Quaichow at least is catching a slight bit here today, but CATL, there you go, could be reaction to those Tesla earnings that we saw. They are a big supplier, of course, of that company. But we're taking a look at how Hong Kong fares too. There was signs, as we talk about, right, that national team support pulling out. What does this mean for this market here? And you see continued downside, but maybe not as bad as yesterday. So there you go. HS Tech, though, is flat. MSCI China also is flat here right now. And we're watching the likes of some of these big cap tech like Tencent, still seeing a decent bid here. So is Alibaba here this morning. And we're watching very closely what this means. So the commodity side of things, we're watching the iron ore, watching the copper miners as well, just given what we've been seeing, this weakness that we're seeing across commodities. And that's why we've been seeing the Aussie dollar as well fall as well in favor or following this tumble. And you're seeing iron ore miners not doing too much. In fact, Jiangxi Copper, Daojing Miner actually seeing a decent bid here today. Tesla suppliers, we're also watching out for. We talked about CATL. Obviously, the EV space, we're watching very closely as well, just given those disappointing earnings. And you are seeing a pretty much negative reaction as well. Prada, there you go, 3.5% downside. This is after we heard from LVMH just talking about the China slowdown, the impact. You know, this really was supposed to be the resilient part of the China consumption story, which was luxury. And you're starting to see that slump really weighing on spending there as well. So that's really kind of seeing Prada falling, following what we saw with LVMH. And then there's the China dividend story, right? This was supposed to be the more defensive part of this market. And we're watching these this is the Shanghai Stock Exchange Dividend Index, which has basically fallen close to 5% in this month alone. We had a stunning reversal after 6 quarters of outperformance. So people are looking at some of these energies, stocks, the SOE trade, as ways to kind of maybe find some yield. But even that sort of trade is faltering here right now. There is some sense that maybe, if the PBOC is worried about falling rates and trying to put a floor on these bond markets, that might really roil the dividend stocks as well. And there's a big question, right? Are these banks, these energy companies, these SOEs, are they really can be seen as havens in this market? Still with us is Tommy Ta, head of APAC investment strategy at BlackRock. Yeah, I mean, what do you make of this kind of resumed sell-off? I mean, post-Plenum, it seems like there's still quite a lot of, people are really underwhelmed about this market.
Yeah, I mean, I've been listening to you talk about the China market, and I was trying to come up with something super positive.
Please do, yes.
Help you out here. But yeah, it's obviously very difficult at the moment. I think for most foreign investors, again, China has kind of been parked to the sidelines a little bit. It is a case of needing the onshore consumer, domestic investor to come back. In China, we're not really seeing signs of that at the moment. For us, it's more about, you buy emerging markets ex-China, and then how do you dial up and down your risk to China? And for us, it's still about, do you go onshore or offshore? I think primarily for most investors, you would go offshore first, just because the short interest from U.S. investors is so high there. And so if we do see a rebound, then it will most likely happen there first before the domestically focused onshore stocks come back. But again, it's more about the earnings growth, because obviously the People's Bank of China are not really going to come to the rescue. So we need to see some earnings growth there, which will be driven by onshore consumer. We're not really seeing it yet, so it's been very difficult.
Yeah, it seems like this sort of these ex-China flows they're still flourishing, right? I mean, has that changed in any way since we've seen maybe a Biden exit?
No, and it's, to be honest, it's not really driven by fundamentals or macro picture. A lot of it is around benchmarking, right? I mean, we kind of saw this going all the way back to the A-share inclusion days. I don't know if people remember that, the MSCI A-share inclusion days. Those were quite fun times for China investors. But it's more about, China was too big of a proportion of EM anyway. So EM ex-China and then dialing up China risk in portfolio, similar to what we saw in early 2000s with Japan, Asia ex-Japan. So we continue to see inflows into EM ex-China. A little bit of it is driven by investment views, but a lot of it is driven by benchmarking.
What about these high dividend names? I mean, what are you seeing there? Is it still going to be value over growth? Or
for China specifically? I don't think so. I mean, investors have been looking, obviously, for dividends in the region as a whole. dividends growth is only as good as the underlying company's performance, because if you continue to see earnings drop, then dividends get cut. So I think there's a little bit of front running there in terms of expectations of dividends getting cut in China. And I think it's kind of been a case of looking for anything that might outperform. So silver lining, get some yield. But unfortunately, that doesn't seem to really be performing very well. So, I think if you're looking for a play into China, it's going to be a high beta. China is going to continue to be a trading range, and so if you want to play that trading range, you want something high beta.
Is that including the tech plays in China?
So generally we're looking offshore, onshore, but when we look offshore, we're talking more Hang Seng Tech, the names in there, Tencent, Alibaba, Baidu, etc.
Yeah. You're still focusing a lot on some of these alternatives to China, right? Maybe out of the EM space is probably India, but Japan certainly is still one that you're focused on.
Yeah.
What's going to be the next phase of this rally in Japan? What's it going to look like?
Yeah, so Japan is interesting because everyone is focusing on the performance, like it's gone up a lot, so we should be in it. But actually, for us moving into the second half of the year, the last couple of months, the performance at the benchmark level hasn't been great. But from our perspective, number one, the move into index has been very strong over the last year, and number two, we're looking from a portfolio perspective. Japan is being driven by value. You have divergent rate paths in terms of BOJ versus the Fed and other central banks. And so for us, we actually put it in the diversifier sleeve. We don't actually even put it in the equity sleeve. So, for us, it's more about, how do you get granular and active in Japan, moving away from kind of broad index more into high dividend value active funds and having it as a diversifier in your portfolio.
That's interesting. How's India played? Is that also a diversifier for you guys?
On the bond side, it's more of a diversifier. On the equity side, it's more of long-term strategic growth. As everyone knows, there was a little bit of a hiccup during the election cycle, but it bounced back very, very strongly. Yeah. And again, moving back to benchmarks. Most investors that we speak to, most huge global investors are benchmarked to something MSCI ACWI or EM or whatever it might be. When you see the market cap rising in India so quickly, the majority of that huge pool of money is still underweight. So we're still seeing investors underweight India, and we still think that there's a lot more room to move into that country.
Thomas, thank you. Thomas Taw there, head of APAC investment strategy at BlackRock. Particularly when it comes to these markets, we're just 8 minutes into the session, and we're actually seeing the CSI 300 reverse some of those initial losses here. So at least we're seeing some green across the board, across these greater China markets here today. This is what we're seeing in the CSI 300. So after that 2% drop yesterday, we're seeing slight recovery, right? We're talking about a fifth of 1%. Let's keep in mind. HS Tech, though, catching a bit. So a little bit more of a reversal. We'll see if these gains sort of stick here. We got plenty more ahead. This is Bloomberg. Welcome back. You're watching the China Show, looking at some live pictures out of Hong Kong here today. A big case that we're watching out for. The Hong Kong media tycoon Jimmy Lai's national security trial resumes today, with the defense expected to present their case. Let's get to our China correspondent, Min Lo. She joins us to see, just first and foremost, let's bring us back up to speed of the background of this case.
Yeah, so this is a national security trial that began in December of last year after much delay, and Jimmy Lai was denied bail, so he had already been in prison for over 1,000 days when this trial began. Today is day 91 of the trial. It was expected to run for only 80 days. It's obviously gone longer than that. He is charged with 2 counts of colluding with foreign forces and 1 count of publishing seditious material, and this is of course related to his role as the founder of Apple Daily for some of his social media posts and articles where he had urged other countries to impose sanctions on Hong Kong and China, as well as related to some articles where he had, rallied the people to come out and fight for their liberties in that 2019 protest against this proposed extradition bill that could see fugitives being sent to mainland China. And that protest had, of course, derailed that bill at that time, but led to the imposition of this national security law in 2020. So the prosecution has already completed presenting their evidence documents, which included over 160 articles from Apple Daily, as well as his interviews and live streams. And today, his defense team is expected to argue their case. They're expected to argue that he has no case to answer to, that the prosecution has failed to establish a prima facie case.
And this case is also being seen as a test of Hong Kong's judicial independence.
Yes, that's right, because we have seen already 3 foreign judges resigning from the High Court from the highest court, which is a court of final appeals, after the imposition of that national security law. The Hong Kong government has said that they have always respected the independence of the judiciary, that they did not put pressure on the courts. But of course, we know that Jimmy Lai had also been prevented from hiring a top British lawyer, Timothy Owens, who was barred from representing him after Beijing published its first interpretation of the national security law that confirmed that the power to bar these foreign judges in such cases lie with Hong Kong's top leader and a powerful national security committee. And at the same time, Hong Kong's chief executive John Lee had been able to handpick 3 judges to preside over this trial instead of a jury. And that's why countries like the US and UK have been saying that this trial is politically motivated, although Chinese and Hong Kong officials have said that Jimmy Lai will get a fair trial.
All right, Min Min, thank you. Min Min Lo there, a China correspondent, with a preview of what to expect in court here today. We're watching one stock in particular, ASMPT. This is the chip maker in China. The stock is tanking here this morning. We're down about 19% on the back of what we heard for their third quarter revenue forecast. So that was missing estimates. They're seeing revenue at $370 million to $430 million. The street was hoping for a $500 million or so print. So that was also a miss. Results in the second quarter were also a miss as well. Net income did fall some 56% from a year ago. It seems like they've been citing a slower than expected recovery in the semiconductor market that really did weigh on those results. We got plenty more ahead. This is Bloomberg. Well, Meta CEO Mark Zuckerberg is urging the U.S. not to close off tech from other parts of the world, and even as it tries to win an AI arms race against China. Zuckerberg told us exclusively what the best strategy would be.
There's this question, which is how should the U.S. approach kind of AI competition with China? And there's one strain of thought, which is like, okay, well, we need to lock it all down. And I just happen to think that that's really wrong, because the U.S. thrives on just kind of open and decentralized innovation. I mean, that's the way our economy works. That's like how we build awesome stuff. But I think the leading companies should work with the U.S. government and make sure that our kind of national defense and things like that have sort of a perpetual first mover advantage on the leading technology in the world.
So we win the AI wars this way.
I think there's the question of what can you hope to achieve. If you're trying to say, okay, should the U.S. try to be 5 or 10 years ahead of China? I just don't know if that's a reasonable goal. So I'm not sure if you can maintain that. But what I do think is a reasonable goal is maintaining a perpetual, 6-month to 8-month lead by making sure that the American companies and the American folks working on this continue producing the best AI system.
And you can catch that wide-ranging interview with Meta CEO Mark Zuckerberg on The Circuit with Emily Chang. That full episode is streaming right now on Bloomberg Originals. Well, let's stick to that AI theme, because China's push to boost its AI capabilities in the race for global tech supremacy is facing its latest roadblock, the nation's core socialist values. Bloomberg Opinion columnist Catherine Thorbeck says it's a timely reminder that a chatbot cannot have its own political beliefs. She joins us now from the Tokyo studio. Catherine, it's great to have you back on the program. So tell us about how Beijing is trying to ensure that these generative AI tools really toe the party line.
Right. So we sort of knew for a while that Beijing intended to sort of implement its internet censorship regime onto its AI tools. But new reporting came out last week that really sort of shed more light on what this actually looks like. And basically, China is forcing AI companies, big and small, to undergo sort of very rigorous tests to make sure that the outputs, that the responses from these AI models, don't say anything against the Chinese Communist Party and don't sort of speak ill of any sort of Communist Party leaders. And this process is actually very, very tedious. I mean, you can sort of restrict the amount of data and restrict certain keywords that goes into it, but this can sort of have results of not very sophisticated, AI systems. And it's really large language models, the technology underpinning these technologies, these generative AI technologies, are really sort of a black box. So trying to censor outputs is actually a very, very difficult task, and it's putting a lot of pressure on these Chinese AI companies.
So in light of all that, I mean, how will all this impact its efforts to really catch up with the U.S. then when it comes to this AI race?
So I think it's definitely another sort of major roadblock. And, China is already at a disadvantage here because of sort of all-out U.S. efforts to curb access to semiconductors and advanced semiconductor manufacturing equipment, which is really, required for the AI race. So I think it's safe to say in the short term that this will probably set China back even further in its race to catch up with the U.S. when it comes to AI development. That said, I do think that the West sort of has a tendency to underestimate China. And I think, being forced to sort of approach large language models in this sort of novel way, I don't think we should necessarily underestimate or rule out how this could, in some ways, lead to more sophisticated AI bots and lead to sort of developments in this technology that the U.S. has, been trying to do for a while now, and for a number of different reasons have been trying to put sort of guardrails and censor the outputs of these AI bots, and it's a very, very difficult task. So the fact that China is sort of being forced to do this, and Chinese AI developers are being forced to do this, I think we'll sort of have to see how that eventually plays out in the long run.
So more broadly speaking then, Catherine, what do you think people should be interested in this AI race from both sides of the globe? And what can we really learn here?
Right. So sort of my biggest takeaway from this, and I think sort of a global wake-up call, is really that we shouldn't be treating these machines as humans. I think we shouldn't be trying to assign human values, human sort of political ideologies. And I feel like ever since sort of ChatGPT came out, the world has really been mesmerized, and we've sort of had a tendency to sort of anthropomorphize these sort of machines. And the reality is they're just machines, and they're not humans, and we shouldn't expect them to be, behaving as humans or making human decisions. More recently, sort of in the U.S., we've seen Elon Musk say that he's trying to make a chatbot that's not woke, whatever that sort of means. But ultimately, I think we should both in China and in the U.S. look at these tools as machines, and instead of trying to make them more human and sound more human, we should start thinking about how can we actually use these machines to actually help real humans, and what does that look like, and what are some of the practical applications there?
Catherine, great stuff. Thank you. Catherine Thorbeck there, our Asia tech columnist joining us out of Tokyo. Some of the big corporate stories we're following for you today. Apple is reportedly working on a foldable iPhone that could be released in 2026. Tech news outlet The Information says the firm has reached out to suppliers in Asia to make components for the device. The report says Apple has now created an internal code for the product, signaling that the idea has moved beyond the conceptual stage. Shares of Texas Instruments rose in extended trade after the company said sales in the third quarter could reach nearly $5 billion. That did beat average analyst projections of around $4 billion. The forecast could signal chip makers are back on the path towards growth as customers clear inventory buildup. LVMH sales growth slowed in the last quarter as shoppers reined in spending on luxury items. Organic revenue at its fashion and leather goods unit rose 1%, about half the gain expected by analysts. Sales in the region, including China, tumbled 14%. That was partially offset by Chinese travelers spending overseas, especially in Japan, taking advantage of that weak yen, of course. You take a look when it comes to what's been going on with these stocks here in particular, watching the consumption space. These are probably the two biggest losers on the board on the HSI here right now. Chow Tai Fook and Nongfu Spring, both lower by about 5%. Well, we heard from Chow Tai Fook, they talked about that sales decline on weak gold demand. So what we're seeing here, the shares dropping as much as 7% earlier. So 20% on-year retail sales drop in the first quarter. That's what we heard from the gold seller here as well. So soft gold demand amid what we've been seeing which is record high gold prices, right? And the weak macro. It's interesting to hear that from Chow Tai Fook. Novo Spring as well, Daiwa had a downgrade on that stock in particular also. EV stocks also in focus, just given what we heard from Tesla here. So, yeah, we talked about the earnings picture, 4th straight quarter of disappointing profits, delays in the robo-taxi, planned factory in Mexico on pause through at least the U.S. election. So that really is sort of impacting these Chinese EV stocks here this morning. BYD is down some 2% here right now. Xpeng down some 5%. And, of course, we're watching what's been going on with these benchmarks as well. Key to watch is really what's been going on in the FX market. So there's an interesting drop in dollar-yen, but also when it comes to the renminbi as well, we're at 728 levels. But we did just see the PBOC with one of the weakest fixings since November of 2023. So a little bit more of a, I guess, tolerance here for that weaker currency. But people are really scratching their heads on what's leading this yen to strengthen here. Of course, we're just a week away from this BOJ meeting. Perhaps there is still a lot of anticipation of whether they are going to move next week as well. But certainly, we'll watch this one on what's really driving that drop on dollar-yen. Keep in mind also, markets are closed in Taiwan and the Philippines today, both dealing with storms. So we're taking a look at some of these pictures that are quite remarkable in Manila, just the flooding that we've seen there as well. We've heard from, really what's been happening is that, so stock trading has been suspended. Also when it comes to dollar peso as well. So we're watching very closely. You can really check this on when it comes to MapGo, where this storm and typhoon is going here right now, but enough to really shut down Taiwan and Philippines here today. We got plenty more to come. This is Bloomberg. Welcome back to the second hour of the China Show. Here's a look at the CSI 300 a half hour into the session. So after what we saw yesterday, which was the biggest drop in 6 months, we are extending those losses, albeit it's marginal losses, though, right now when it comes to the onshore markets. Offshore also still seeing a bit of red here, but certainly it's one to watch very closely, especially when it comes to that Shanghai Composite, ever so closer to that 2,900 level here this morning. I'm Yvonne Man in Hong Kong.
And I'm Haidi, Stroud-Watts in Sydney. And Yvonne, it's not just China. Usually we see these kind of divergent momentum, right? But we are seeing broad downside kind of pressure coming down across Asian markets. These hopes that maybe the earnings that we get from the Magnificent Seven could kick off that tech recovery, not so far from what we've seen from Tesla and Alphabet.
Yeah, it's interesting, right, that we thought at least the earnings side of things was strong enough to keep that Mag 7 trade going. But no, it just brings more of that narrative that maybe this rotation trade back into the small caps in the U.S., this tech trade that's broadening a bit here, maybe that still has some legs to come here. But certainly when it comes to China, I think it's just another story, right? It's really about the bearish sentiment, the disappointment from not just the macro side of things, but really out of this plenum. And really that PBOC, what we heard from those cuts really didn't do much as well.
Yeah, and as you say, that rotation trade really does depend on what central banks do, right? We do have some central bank action just crossing the Bloomberg now. The Sri Lanka central bank cutting its standing lending rate to 9.25% from 9.5%. They're cutting the standing deposit rate to 8.25% from 8.5%. So the central bank of Sri Lanka, they're expected going into this to cut the standing deposit and the lending rates by 50 basis points. The expectation, though, was for a steeper cut. 8% and 9% was where Bloomberg Economics had expected those numbers to end at. The reasons, of course, we've seen year-on-year inflation far below the 5% target. It's been trending at about 1.7%. It's also expected to undershoot for the rest of the year. We've also seen credit demand on the private side looking pretty weak, as well as an excess of FX reserves beyond the goal set by the IMF as well. So interestingly, that we've seen a bit of a conservative approach, or more conservative than expected from the Sri Lankan Central Bank, Yvonne.
Yep, let's bring in our MLS strategist, Mark Cranfield. He's watching markets for us and joins us from Singapore. Obviously, we've got to focus on these U.S. tech earnings, but also these moves that we're seeing across FX markets. That drop in dollar-yen, I mean, Mark, maybe we'll start with that. What's going on here?
Well, apparently traders are talking about the risk of a 15 basis points increase at the Bank of Japan meeting next week, which obviously is a bit larger than the 10 basis points they did back in March. So if we do get a move of that magnitude, and you get a reduction in bond buying by the Bank of Japan as well, obviously that's a very good reason for people to move into the yen, especially when the short positioning is still very large. We did see quite a big cutback in that in the most recent CFTC data, but still the numbers are very, very large. And so any move now in dollar yen is a lot of it is people unwinding those positions and getting ready for the Bank of Japan. So between now and the meeting in a week's time, obviously the risks are more towards the downside, particularly when we're thinking about the Federal Reserve wanting to lower interest rates as well. Of course, traders will be very aware that it's the time when we might get leaked stories in the Japanese media. It's about this time when there's a week to go, when we often see conflicting signals being put out of inside sources from the Bank of Japan saying one thing or another. So providing we don't see anything in the media which says that the Bank of Japan is going to push the decision to the next meeting, if they're still looking at July, then for now the bias is very much towards a stronger yen in the short term.
Does that have much of a meaningful implication in terms of what the next drivers are going to be for Japanese equities?
Well, the Japanese companies can deal with a stronger yen. It's a question of how much stronger, of course. But if you look at the annual reports from most of these big Japanese companies, they forecast their average dollar yen rate or their average euro yen rate to be much lower than where it was in the market. So they're budgeting for some yen strength, maybe 10 to 15% yen strength. So even if dollar yen was say to drop to 140, 145, that probably is well within the compass of what Japanese companies are expecting. If it goes to something like 120, that's a different story. At those kind of levels, it probably does start to hurt Japanese exporters, but they can definitely live with a stronger yen. And of course, it's not the only story. They're changing their governance structure. They're paying higher dividends. There's a lot of tweaking going on in terms of these cross ownerships as well. We're seeing Toyota currently trying to unwind itself with the holdings with the big banks. So there's a lot of positive things happening within the Japanese space anyway. The yen is just one factor. Providing it doesn't strengthen too much, Japan can deal with it.
Yeah, Japan can deal with it. I mean, obviously, how much are they benefiting from what we're seeing in China, right? This weakness that we're seeing in this equity market seems to be coming back in a big way now, Mark. Are there any sort of bright spots that you're looking at ahead?
There's going to be obviously some related to if the Chinese authorities can really improve the finances of local governments, there certainly will be some plays within China. But it's a very much an internal story. It's going to be for people who are very good at stock picking, those that can see the differences in the housing sector or in the government-related sector. That's much tougher for the international people to look at. International investors tend to look at a top-down approach. And what they're seeing so far, they're not very impressed. They were hoping for a lot more from the third plenum. Our economists are describing it as a little bang. Well, really what foreign investors were looking for was shock and awe. They wanted to be surprised with big numbers and big strategies, and that hasn't really happened. So you've seen the PBOC had to lower interest rates immediately this week, and there's probably more to come in that side as well. So it looks as though it's going to be very tough for people to make big allocations to China, especially when you see the rest of the world is looking more interesting because of the AI story or the rotation that's going on, earnings picture in the United States. There's lots of reasons for people to deploy their money elsewhere, and China is definitely at risk of being left out in whatever happens in the global space.
Mark, thank you. Mark Cranfield there, a Bloomberg MLI strategist joining us out of Singapore. Let's bring in Morgan Stanley Chief China economist Robin Xing now. Of course, we talked about this surprise rate cuts. Didn't really do much to change the market sentiment, but even after the plenum, just wondering, on the eco side of things, where are we in this recovery now?
Well, the policymakers are still in reactive easing mode. So the 10 bips cut you mentioned is an answer to the weaker than expected data, but 10 bips is not enough. And we do expect more cuts from PBOC, maybe another 20 bips, but these are still not enough to decisively reflate the economy. They need to shift from current policy trajectory, which is supply-centric, focusing on investment, to something like consumption-centric.
Which we didn't get at the plenum either.
Well, the plenum, I'm sure you have invited a lot of experts talking about the takeaways. And the majority of these 22,000 words of the full document is about tech innovation. It's about supply chain self-sufficiency. So that basically gave you the answer is still pretty much supply-centric. But I do think I see some green shoots about social welfare reform. That's the only bright spot from the third plenum. They are widening the hukou benefits to cover 250 million urban migrant workers. That's probably the part, if they really deliver in a timely fashion, they can boost the consumption, reduce precautionary saving.
Yeah, before I was going to talk more about the tech innovation side, because you mentioned you've been crunching the numbers. I think that new quality productive forces is that term, but even just any mention of tech innovation was 160 mentions in that readout. I think four mentions in the property market. Is there a danger then of really focusing too much on industrial policy? Does it only lead to more deflationary pressures and overcapacity concerns?
That's a good point, and I agree with you. This seems to be pointing to the fact that China shifted away from a housing-driven credit cycle to another misallocation, which is too much focus on manufacturing. In the last 4 years since the housing downturn, there's a big shift of bank loan from bank loan to property sector to manufacturing sector. Yeah. But that's creating overcapacity. It's not just for one sector like battery or EV. Now the overall manufacturing sector is facing overcapacity. The marginal return of investment has been deteriorating. So if they keep this current policy trajectory, in a few years we may see debt to GDP keep rising, and this credit misallocation risk will be surging.
It's interesting when you talk about hukou reform, right? Because in the longer term, can that fix the property imbalance that we see?
Yes, it definitely has the potential to fix some of this imbalanced growth and insufficient consumption problem in China. So for the first time, they vote to give the migrant workers, 250 million of them, the hukou benefits, access to pensions, healthcare, and education. But the biggest unknown part of this plenum document is the timeline and the roadmap to get there. How soon can they deliver this? How can they finance this new social welfare program? We estimated to get there with this big social welfare reform plus some other rebalancing consumption stimulus. They need $1 trillion. It's a $1 trillion mission. And are they going to finance it with central government debt, widening deficit? That's our proposal. Or they can finance it with reforms on SOE, use the SOE dividends, which is also good. But unfortunately, if you listen to some experts talking about, the plenum also talked about tax reform, imposing new tax for the local government. I think that could be a mistake, using new tax, hiking tax rate to finance the social welfare. That's not going to reflate the economy.
The timeline is interesting, right? Because in a sense, the deflating of the property bubble, it had to happen, and I'm sure that leaders knew that it had to happen. I do wonder, so in the meantime, as they kind of tackle the big structural challenges, the demographic challenges, do we just see fiscal monetary policies sort of trying to, minimize further downside as opposed to being truly pro-growth?
I mean, the social welfare reform, basically the full document said they need to complete it by 2029. So it's a 5-year, that's a deadline. But to get there, to reflate the economy, they need to do it quickly. We estimated that $1 trillion cost associated to rebalancing reflation campaign, they have to deploy it within next 2 years. The longer the deflation persists, the higher chance eventually you may see firms' top line has been hurt, margins has been deteriorating, they cut wages. And eventually that's going to hurt the bottom 20% income earners. That's inconsistent with the common prosperity or poverty reduction goal of the third plenum. So I do think, yes, there is a 5-year plan, but if they can deploy it within next 1 to 2 years, that could help them to avoid this deflation consequence, which is 20%, the bottom 20% could be hurt more by deflation.
You mentioned about tax reform and that it may not be a good idea. it's interesting because people thought that this was an encouraging step to at least alleviate some of the burden on local governments, that you're sharing some of these tax revenues from the central government to local. I mean, if it's not a good idea, I mean, how can we fix the fiscal plumbing then?
Well, the tax reform is a twofold issue. One is the share between central and the local. As of now, central and the local government get half of the tax revenue. But local government is responsible for 85% of the expenditure. So, of course, that imbalance made their life pretty hard. They want higher share from the tax revenue. But meanwhile, with deflation, overall tax revenue in China has been declining as a percent of GDP. So to reflate their tax revenue is possible. They may be thinking about imposing new tax, like consumption tax. I do think, if anything we learned from Japan's successful reflation recently, is in the early days of Abenomics, they did a coordinated monetary and fiscal easing, except they were talking about consumption tax hike. And my colleagues try to believe that was probably a mistake, because you need more monetary and fiscal easing working together instead of imposing new tax. That fiscal consolidation is not good for reflation. So to your question, I do think tax reform, balancing the share between central and the local, that's a good thing. But if you impose new tax, raising the tax burden for the corporates and the consumers, that's inconsistent with the reflation goal.
Yeah, especially when consumption is so weak. I have one more question left, but I have two more topics to talk about, whether it's the Politburo meeting coming up or U.S. election risk. I mean, what are you spending more of your time these days here when it comes to what impact it could have on China?
I mean, the two things could be intertwined. Politburo meeting, I think it will confirm they will do reactive easing. After PBOC rate cut, the State Council is going to let the local government to tap this super long-term treasury for consumption goods upgrading. So that's a relaxation of how they can use this long-term bond from just the infrastructure financing to consumer goods. That's a good thing, but it's still very modest. It's only reactive easing. I think that's the tone from upcoming Politburo meeting. But if there is definitely higher trade barriers from the next administration from the U.S., and the Chinese economy could get hurt more, like we learned from 2018, 2019, that tariff hike probably costed China 1% of their GDP growth. So that means next year, China has to focus more on domestic demand with a bigger stimulus on the consumption side.
All right. Robin, great to have you. Robin Xing there, Morgan Stanley chief China economist, joining us here in Hong Kong. Still ahead on the China show, we're getting more analysis on the big tech earnings out of the U.S. with Beth Kindig, lead analyst at IO Fund. Hear why she sees Tesla facing major headwinds in China. This is Bloomberg. Welcome back to the China show. Now to the U.S. presidential race, and Kamala Harris has taken aim at Donald Trump in her first campaign rally since launching her White House bid by referencing her past work as a public prosecutor.
In those roles, I took on perpetrators of all kinds. Predators who abused women, fraudsters who ripped off consumers, cheaters who broke the rules for their own gain. So hear me when I say, I know Donald Trump's type.
Kamala Harris really hitting the ground running, of course, set to arrive in Houston at Texas at 3:25 p.m. local time. She's also set to speak at an event in Indiana at 12:45 p.m. Eastern time as well. Let's bring in Yvonne Quinn for more, because quite clearly she doesn't have a whole lot of time, in fact, under 100 days to really get this campaign on the road. We've seen this sort of blitz of support both within her own party, within the donor base, and also within seen, celebrities and pop stars, right? I'm seeing all these memes, endorsements from pop stars that appeal to kind of, teenagers. I would hope teenagers, because I don't think they're trying to sort of appeal to my demographic or even Yvonne's demographic, right?
No comment from me on that one. That would be opining.
But tell us about the brat summer that Kamala Harris is having right now.
Well, that's just it. I mean, this is Charlie XCX, right? The British pop singer and composer. I mean, the woman is 31 at this point. It's not like she's, a tween herself, but she's just the top of the iceberg, really. Every young person has endorsed Kamala Harris that I can see at the moment. You were talking about, Ariana Grande, Demi Lovato, Cardi B, for example, who was big for Bernie Sanders last time around. Also John Legend and Beyonce, though. So these are people that are obviously appealing to the tweens and the Gen Zs, but also people who've had their fans grow up with them, and some of those fans now are in their 20s and maybe even a little beyond. But this brat phenomenon is quite hilarious. I mean, a brat, as defined by Charlie XCX in her eponymous album, or the Brat album, is somebody who's a little messy, who says something dumb sometimes, who parties her way through it and sort of keeps an optimistic outlook. And it's important, not just because it's a little frivolous, but remember, these things can be very socially useful, right? This is earned media. This is not media that has to be paid for by the campaign or by a PAC. This is, viral content that keeps Kamala Harris in the discussion among people who are voting now, and also who may be voting in the future, and people who may not have registered yet. Remember, Taylor Swift put out a big call for young people to register to vote last year and had a huge impact with that. So many more young people did register to vote. Now, Taylor herself hasn't endorsed anybody, at least yet, this season, but it's for sure that these kinds of things can have a big impact. I mean, you guys remember when the K-pop crew managed to really humiliate Donald Trump by registering for his rallies and then not turning up?
Yeah, it's really, it'd be very interesting to see whether we can get Swifties and also Beyonce fans as well involved, right? I'm feeling about 100 years old at the moment, but I do remember that when Cardi B endorsed Bernie Sanders, it didn't get him elected 4 years ago. So, is there any reason to believe that these fun endorsements will actually help Kamala Harris?
Well, obviously, it doesn't swing an outcome typically, right? I mean, as you mentioned, Cardi B and the Bernie Sanders phenomenon, it was great fun at the time. It gave Bernie some momentum. It made him a little more relevant to younger people. But it got those issues out there and being spoken about in the media. And ultimately, Bernie obviously wasn't the candidate, didn't win. But this time round, given that there's so much support behind Kamala Harris from all of these people, you can't help but imagine that it won't hurt at the very least, and that it could help quite substantially. I mean, some of these people have massive online followings. If you take Ariana Grande, for example, her Instagram following is greater than the population of America. She has nearly 400 million Instagram followers. If you compare that with someone like Jason Aldean, who's, endorsed Donald Trump, the country singer, 4.4 million. It pales in significance. Kid Rock has just 1.2 million followers on Instagram. So these are very much memes that can, go around the world, and not just in the United States, but abroad as well. And they really can have an impact, not to mention the fact that Kamala Harris's issues are some of the issues that young people are really caring about. The cancellation of student debt, for example, helping all families across America with a better minimum wage, childcare, more family leave. Climate change in particular, these are not so much the issues that perhaps the Donald Trump demographic cares so much about.
Bonnie Quinn there with us. And you know what else is in November? The election, but also Wicked, which I'm very much looking forward to. Bonnie Quinn there in Washington giving us some of that pop culture context for Kamala Harris' campaign at the moment getting underway. Yes. It all works beautifully together. Plenty more ahead. This is Bloomberg.
All right, we're checking movers here this morning, and of course, Tesla suppliers are still in focus after the disappointing earnings, and of course, that earnings call with Elon Musk really talking about it's the promise of autonomy. That's the value of Tesla. Everything else is just noise at this point. The market not so much buying that. You take a look at how LG Innotek is. We're down about 2.5% here. We're watching ASMPT. This is the chip maker in China as well, plunging still some 16% on the back of their earnings. The third quarter revenue forecast also missed estimates. Also, when it came to the second quarter, net income profits were half of what it was a year ago. So maybe slower than expected semiconductor recovery there. And Google-related stocks, obviously, just given what we saw with Alphabet, it was in terms of the earnings side a beat for Alphabet, but the after-hours trade was still pretty underwhelming as well. But it seems like, at least for now, some of these Google-related shares are still faring a bit better. SK Hynix is still up some 3%. This is Bloomberg.
It is 11:29 a.m. in Tokyo, where Japanese markets are going on a break in a minute. There's a lot of repricing going on when it comes to dollar yen, and potentially these expectations being set up as we get into both the Fed and the Bank of Japan meeting next week. High expectations for that move from the BOJ. We could see quite a reaction in the yen if that fails to come through. We are seeing most Asian stocks kind of tracking in a pretty tight range. Some modest losses there when it comes to Japanese equities, about the tune of 0.25%. Also for the Nikkei and the broader topics there as well. Tech really driving some of those losses, but interestingly in Japan, we're actually seeing more the likes of utilities, even some of those property and consumer discretionary stocks seeing bigger losses than tech, Yvonne.
Yeah, I think it's really the movement in the yen that's really led to people really confused about what's going on, why this sudden surge and strength in the currency here right now. Broader market speaking, we're pretty much flat and treading water here when it comes to Asia Pacific. So it's a mixed picture. Keep in mind, of course, big markets like Taiwan are now not part of this whole discussion about where the tech trade goes because they were forced to shut because of this typhoon. Also, when it comes to the Philippines as well. So you take a look at sector by sector, it's a mixed bag overall, but infotech is still slightly gaining here this morning, but we're pretty much seeing lower when it comes to consumer staples, discretionary finance stocks as well. But we're watching very closely what goes on with some of these commodity-related stocks, just given the tumble we've seen in base metals, just given these concerns around China. U.S. futures are still punching a little bit on the negative side. In fact, these moves are quite pronounced in the Asia session of 1/3 of 1% to the downside here. Key to note, though, Barclays was still one to upgrade their S&P forecast last night. I think it was 5,600 from Barclays here right now. Dollar is flat. But it really has been about what happens, what we saw in the after hours with Tesla, with Alphabet. What does it mean when Wall Street wakes up tomorrow? Because what we saw with those shares was a slump in extended trading. And that's even after Alphabet reported a second quarter revenue beat boosted by cloud computing demand and search ads. Bloomberg's Ed Ludlow has more on the company's results in his conversation with the Alphabet CIO, Ruth Porat.
This was the first quarter where cloud revenues exceeded $10 billion, but also for the first time, they kind of had more to show around artificial intelligence, all the investment and work in that field. The way that Ruth Porat described it on the call with me was that, look, it's AI infrastructure solutions and generative AI. They're meaningful drivers of growth for the cloud business. And on the analyst call, she kind of expanded and gave an almost granular kind of run rate figure, which was that year to date, the company's generating billions of dollars in the context of cloud from generative AI and AI infrastructure. Search is the main driver of overall growth right now. That's not a surprise. It's still the bread and butter. But there are signs that the work of AI-driven search is starting to boost that. Wiz was the question that everyone wanted to ask. Basically, Ruth Porat declined to comment specifically on Wiz. But when we asked about M&A, she said Google and Alphabet, the parent, is still open-minded to opportunities as long as they kind of meet the requirements of what they're looking for. That also includes working with whoever's in power in the context of a US election later this year. There were some bits that kind of also took me by surprise. Alphabet and Google reaffirming its commitment to Waymo, the robo-taxi service. Waymo's doing 50,000 paid rides a week right now, predominantly in San Francisco and the greater Phoenix metro area. But Alphabet's backing them financially. $5 billion will go into Waymo on an annual basis. It's kind of in line with historic investments, but they said they're really pleased with that line of work. This was also Ruth Porat's last quarter in this kind of combination role of CFO, CIO, and president, and the new CFO coming in July 31st. Now she's going to be much more focused on public policy and much more focused on that cloud growth story, particularly as Google Cloud Platform works with governments as opposed to just corporate customers. This is Ed Ludlow for Bloomberg News in San Francisco.
Let's get some analysis now with Beth Kindig, who's a lead tech analyst at IO Fund, which runs tech-focused stock portfolios. And Beth, let's start off with what we've seen from Tesla. And we've seen, obviously, that investor reaction, the disappointment. How much of this do you think is to do with the fact that Elon Musk has been selling the company as so much more, right? Robo-taxis, humanoid robots. He was just tweeting about, soliciting feedback on investing in XAI as well. Does the timeline of these things being pushed out worry investors at this point?
Hi, Yvonne. Absolutely. What I would say, though, is in the first 5 to 10 seconds of getting back a Tesla report, the first number I look at is automotive gross margin. That is really driving this price action. When automotive gross margin went below 20%, we saw Tesla, the lagging Mag 7 stock. This is when the stock really started to sell off. The market was expecting 16.4%, and we got 14.3%. That difference in the automotive gross margin is substantial. Tesla investors were hoping to see a bottom of sorts in the 16% range, and it has been driving the price action for the last 9 months, the negative price action, and we're seeing a similar negative reaction after hours due to that very big miss that the street was expecting.
There's also a lot of concern over FSD, right? How much further work there is and potentially even the need for a pretty major overhaul.
When it comes to full self-driving, what we've really reminded our newsletter readers is forget about these speculative business segments and really look closely at the fact that Tesla is a Fed-driven stock. It is interest rates that are putting pressure on this company. They had to subsidize financing to the tune of that lower gross margin. So we also saw evidence of that when the deliveries came in quarter-over-quarter growth, but production was the lowest we've seen in 7 quarters. It's all of these little clues that Tesla, as big of a company it may be in the future, today is very dependent on what the Fed does.
That's interesting, too, that they're so sensitive to what the Fed does. What about when it comes to China? Because it seems like, this EV market there is, I guess you could say, losing a bit of momentum. Obviously, given what the leadership and what we've seen as some of these local names have really come through. But what are some of the major headwinds for Tesla when it comes to China? And what is that demand picture going to look like?
China is a great point. I would rank China number 2. Second to those interest rates that we are seeing reflected in the automotive gross margin. BYD is selling 2 to 1 for Tesla in June. Tesla's market share went from 11% to 7%. I'm throwing a bunch of numbers at you just so we can really quantify Tesla's weakness. From my perspective, is found in those fundamentals, is found in that China weakness as well. China is a major market for Tesla. You can't underestimate China in the near term and medium term. Now, when it comes to full self-driving and some of these, AI projects, we're not seeing real revenue from that yet. Of course, we're seeing real revenue from China. So when you lose a big source of your core market, or let's say you're losing market share, those are the things investors truly care about. And I do believe that's what's driving the after-hours price action.
And obviously, you mentioned about the stock performance. I mean, Tesla was one of the really laggers around the Mag 7 for much of this year until maybe just a few weeks ago, where we saw this stunning rally. I mean, what do you think? Was it really on the delivery side that the investors were more focused on, and was that the right way kind of to look at it?
Yes, Tesla was on sale. In fact, back in April, I was on your show and I said, look for an entry point. Tesla being on sale by 60% doesn't happen very often. Ultimately, though, the market got a little bit ahead of itself. There was quarter-over-quarter delivery growth, but they weren't paying close enough paying a close enough attention to average sales price and these subsidies that are dragging on that margin. They didn't wait for all of the information to come out. And again, that first clue is that production was quite weak so that they could move through that inventory. And it does go back to the fact that those average sales prices and having to finance is dragging on this stock.
Also, I'm wondering how the politics really impact the stock too, Beth, because it's interesting that, as soon as we heard that Trump was shot, Elon Musk was quick to endorse the former president, even though maybe some of the former president's policies are, could run against Tesla as an EV company. Do you think the politics could likely lead to a little bit more, disruption around the stock too as we get closer to this election?
What I would point to, and obviously the political landscape is changing almost daily with some of the announcements we've seen recently. What I would point to is that Tesla sold off 60%, many months ago, and it really was aligned with when it went under 20% automotive gross margin. And I don't envy Elon Musk for having to walk a fine line between the political situation right now. But I would go back to, if we can see the Fed lower rates, if we can see that automotive gross margin bottom, this stock is a buy at that time.
Beth, I wanted to get your views on some of the other. Obviously, we've got 2 down, 5 to go. Alphabet was quite a mixed bag, right? On the one hand, we had so much strength in cloud, and I suppose that really lends itself to some pretty high expectations being set up for AWS and Azure as well. But what did you make of the rest of the numbers?
I think it really does go back to Google Cloud. There was a slight acceleration. I think the market wanted to see more. We've seen that quarter-over-quarter acceleration across the big three, AWS, Azure, Google Cloud. And it's tied in investors' minds to the idea that you spent all of this CapEx. Now we're seeing that quarter-over-quarter acceleration. But was it enough for Alphabet to justify the amount of CapEx they've been spending? And that is the tone going into the rest of these earnings reports, which is, you've spent a lot on AI. Where is the return? When can we expect it?
And to that end, I'd really like to hear some of your expectations when it comes to some of these other names. Obviously, AI will be core, China will be core, right? For the likes of Apple, certainly as well. Where do you see the winners and losers as we get through the rest of the season?
For us, it really is one earnings report at a time right now. I love what Google said today on their earnings report, which is that the risk of underinvesting in AI is dramatically greater than the risk of overinvesting, meaning we're not going to see any slowdown from any of these big tech companies on spending on AI. If I were to guess, the best report will be Microsoft, and that's because the AI buyers, the people who are spending to buy AI today, are primarily enterprise. Google, Meta will, of course, use AI to increase, ROI on their own products for advertisers. But Microsoft has the best potential for reporting a nice beat or what the market wants to see on ROI, because enterprises are going to be the first buyers of AI.
Beth, I got to get your take on some of these tech sell-offs that we've seen and some of these big names of late, right? Everyone's talking about this rotation trade. Do you think earnings are going to support that rotation trade or actually hurt it?
I think earnings will support the rotation trade. Mag 7 has carried this market for a very long time. I've been in tech long enough to know when there's gains like that, people take the gains, rotate, find something that's undervalued. And now is a good time to look for those that are undervalued. We have certainly been doing that ourselves.
What's undervalued in your eyes right now?
We like we do like small caps. We like AI semiconductors that are lesser known. We've talked, I believe, on your show about liquid cooling and AI PCs. That's the next wave of AI that hasn't been priced in yet. We like those stocks quite a bit compared to something that is fully valued, such as Microsoft, Alphabet, et cetera.
Beth, it's great to have you back. Beth Kindig there, lead tech analyst at IO Fund. Of course, as we've been talking about, the rest of the Mag 7 are reporting earnings over the next few weeks. We have Microsoft and Meta next week, Apple and Amazon shortly after, and it really all just culminates with NVIDIA, which is out with earnings at the end of August. Coming up, India unveiling billions in spending to boost job creation and support allies' projects after the ruling party's election setback. We look at the budget's winners and losers next.
Take a look at how India futures are shaping up ahead of the open. And of course, we saw quite a bit of resilience when it comes to Indian investors reacting to that budget announcement. That initial almost 2% drop during the budget speech, the finance minister announcing that hike in capital gains tax. But eventually we saw the Nifty 50 actually back into the green. Seeing a little bit of softness there when it comes to the futures session, but certainly much less than what we've seen across the rest of trading in Asia, where it is a broadly softer day. That budget including also massive spending on projects favoured by key political allies, as well as job creation. It addresses a top concern for voters. And remember, they denied Prime Minister Modi's BJP a majority in Parliament for the first time in 10 years. Bloomberg Economics has lifted its GDP forecast thanks to what it describes as a pro-growth spending plan. Let's get more on this. Our senior India economist Abhishek Gupta joins us in Mumbai, also our South Asia economy editor Rishi Bhatia in New Delhi. So Rishi, I'll start off with you. When it comes to the main takeaways from this budget, and I guess the perception of how balanced it is between all of the different conflicting priorities.
Well, absolutely right. It is a prudent a political budget, but also a prudent budget at the same time. Having said that, the budget did focus on key themes, including creation of jobs as well as funding for the political allies. And this clearly shows that Prime Minister Narendra Modi's government has listened to the mandate. In the polls that were held last month, Prime Minister Modi's party lost out on the majority, and he had to bank on allies. And remember, people were also complaining of high cost of living and the fact that there aren't enough jobs for the vast young workforce that is entering into the job market in India. And that is perhaps the reason that Finance Minister Nirmala Sitharaman's 7th budget focused on creation of jobs. They have allocated as much as 2 trillion rupees for creating jobs, for boosting skills, and they're hoping that that is going to help a lot of the young people that are entering the workforce. These schemes primarily include giving incentives to various employers. Having said that, the focus in this budget was also on how much money can the allies really get for the states that they run. In fact, they were demanding billions of dollars, and Prime Minister Narendra Modi has allocated about $150 billion rupees so far for the southern state of Andhra Pradesh, and has promised a lot more going forward for the eastern state of Bihar as well. Having said that, the focus this time around was also whether middle class will get any benefit, where now Sitharaman in her 7th budget has gone ahead and given them some deductions in the tax slabs as well, and that will help them quite a bit.
Abhishek, it was enough for you to lift your growth forecast for India for 2025 to 7.2%. What was driving that upgrade?
Yeah, hi. Thanks for having me on the show. So there were a couple of things very interesting in the budget. First of all, the government doubled down on its commitment to lower the fiscal deficit to 4.9% of GDP. That was in line with our expectations. But what that does is it lowers long-term borrowing costs for the government as well as for the private sector. So that's a big boost for the private sector. In addition to that, the government also increased its overall spending for the year thanks to a large record dividend from the RBI. And apart from this, one of the biggest sectors, one of the biggest risks facing India's manufacturing ambitions has been this risk of mismatch between demand and supply for skilled labor. And with this budget, the government has made its intentions clear that is now going to start addressing that risk. So overall, all of these factors led us to upgrade our GDP forecast for the current fiscal year from 7% to 7.2%. This is ahead of consensus expectations, but this brings it in line with the RBI's own forecast.
Rishi, when it comes to the biggest winners and losers, what have we sort of assessed so far?
Well, as Abhishek pointed out, youth clearly one of the big winners. Also the states that got a pound of the flesh from Prime Minister Narendra Modi. But besides that, several other sectors where the government has said that they will be looking to spend a lot more. A case in point being the manufacturing sector, where the government has gone ahead and has reduced the taxation for new manufacturing units from 40% to 35%. Now, the infrastructure spending has been maintained at almost 11 trillion rupees. Besides that, the middle class that will get more money now in their hands to be able to spend a lot more, and that the government is hoping will boost demand going forward. Now, also on precious metals, including gold, where the custom duties have been reduced, which will mean that the end beneficiary will be the consumer, where the prices will go down for the yellow metal. The rural economy also got about 2.6 trillion rupees of funding from the government, and that they're hoping that that will clearly help. Having said that, on the losers, people who are investing in the markets are the ones who are losing out, because the taxation there for long-term capital gains, as well as the STT, the Securities Transaction Tax, that has been raised.
Abhishek, I'll have maybe a little bit more of a market reaction from you. I mean, the fact that they've done a bit more belt tightening, they're lowering the government market borrowing as well. I mean, what does that mean for the bond market? Can we continue to see yields push a bit lower here? And how should markets react to it?
So what they did was they reduced the market, overall market borrowing, not through a reduction in government security issuance, but through a reduction in the net market borrowing through short-term bills of treasury bills. Before, in the interim budget, they were planning to raise about 500 billion rupees through net short-term borrowings. And now in this revised budget, the net redemption of 500 billion rupees of short-term borrowings will happen. So that's about 1 trillion rupees of less borrowing. And in addition to that, they lowered the gross market issuance of government bonds by about 120 billion rupees. So that was a big kind of signal to bond yields that the supply will remain contained, and that led to a rally in sovereign yields. But again, if you look at where the RBI is at 6.5%, there isn't that much room for long-term yields to slide down, because already the premium on 10-year yields over the policy rate is at a record low of about 40-45 basis points. So unless the RBI starts easing, in our view, long-term yields will probably remain range-bound. They'll probably have scope for another 15-20 basis points of drop, but not more than that.
Abhishek, thank you. Our senior India economist, Abhishek Gupta, there in Mumbai. Also want to thank our Rishi Bhatia, South Asia economy editor in New Delhi. We got plenty more ahead. This is Bloomberg. We're watching some of these gaming stocks in China here. NetEase, there you go. You're seeing a pop of close to 4% here right now in Hong Kong. This is the day before the company is going to launch this big game, right? So I'm aging myself again. Naraka Blade Point Mobile. Goldman also reiterating its buy rating on this stock as well. They're saying they could gross to about 1 billion yuan in the first month after this debut, 6.4 billion yuan in the first 12 months. So certainly that could contribute to some sizable revenue growth there for the company. The rest of the game makers is pretty much a mixed bag right now, Haidi.
Yvonne, I feel like we've spent all hour just aging ourselves, so maybe we just bow out before that gets even worse. Much like these markets, quite a bit of red that we're seeing. We're seeing the Chinax continuing to fall there as well. That is just it for the China show. Bloomberg Markets Asia is next.